This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, everyone. My name is Ivan Caesar, and this is the market wrap for January 31st, 2007. In the news today, the Federal Reserve kept the benchmark U.S. interest rate at 5.25% and said it's still leaning towards tightening credit if needed to reduce inflation. The most important comments were that some inflation risk remain and that the extent and timing of any additional firming that may be needed to address these risks will depend on the evolution of the outlook for both inflation and economic growth as implied by incoming information. Gross domestic product increased at an annual pace of 3.5%, the Commerce Department said today in Washington. That was more than forecast and up from a 2% pace in the prior 3 months. The report's price index rose at an annual rate of 1.5%, the smallest gain in more than 3 years. Prices tied to consumer spending dropped 0.8% annual rate, the first decline since 1961. In earnings news, Altria Group, owner of cigarette maker Philip Morris USA and Philip Morris International, reported a higher quarterly profit on Wednesday, helped by increased cigarette sales overseas. The New York-based company also said it will spin off its majority stake in Kraft Foods in March. The parent company of the Chicago Board of Trade, CBOT Holdings, said fourth quarter profit more than doubled on growth in trading volume, higher average exchange fee rates, and cost controls. The company reported earnings of $1.03 per share, and excluding non-recurring items, earnings were 4 cents a share, better than consensus estimate. The New York Times company reported a quarterly loss on Wednesday due to a weak advertising and hefty charge to write down the value of assets at the New England Media Group, which includes the Boston Globe, Worcester Telegram, and Gazette. However, on an adjusted basis, earnings beat analysts' expectations, therefore sending shares higher in early market trending. Tomorrow's upcoming economic releases include Personal Consumption Expenditures Index and initial jobless claims, as well as ISM manufacturing. As for earnings, tomorrow's calendar will feature Amazon.com, Anheuser-Busch, Archer Daniel Midland, Boston Scientific, Computer Associates, Deutsche Bank, Electronic Arts, ExxonMobil, International Paper, Under Armour, and Valero Energy. On stocks to watch, Logitech International, the biggest maker of computer mice, is the company most likely to join the NASDAQ 100 index after Converse Technology Inc. becomes delisted. This according to Lehman Brothers analyst Gabriela Baez. Converse, the biggest maker of voicemail software, will be removed from the NASDAQ stock market tomorrow after it failed to file financial results. The other stock is U.S. Airways Group. It withdrew the $9.8 billion bid for Delta Airlines today, taking pressures off rival carriers to consolidate. U.S. Airways and number 7 U.S. airliners voided the offer after Delta's official creditors committee said it will instead support Delta's plan to exit Chapter 11 as a standalone company. This was the market wrap for January 31st, 2007. Good night, everyone.